Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be doing our third collaboration with Steve from Crypto Crew University. We're going to be discussing a couple of charts that we discussed back in January. A lot of people liked what Steve was presenting back then. I get questions all the time for an update. Here we're going to do that update. If you guys want information, if you want more frequent updates by Steve, I would encourage you to go check out his YouTube channel. Head over to his YouTube channel, subscribe, definitely subscribe, turn on your alert so you get notified whenever he puts out new videos. And while you're at it, go ahead and subscribe to this channel too if you have not done that yet. But Steve will be presenting a couple different charts today. The Pi cycle top indicator is what we're going to start off with. I know a lot of people have been requesting an update on this, so Steve, it's a pleasure to have you on the show again. If you could provide a comprehensive update here for everyone on where we are in terms of the Pi cycle indicator and sort of what do you see sort of going forward?
Sure. Thank you, Ben, for having me on the show. I'm excited, especially to talk about this chart. I think this was a major buzz from when we presented it last time, and I think Ben was bombarded with questions to give some updates on the Pi cycle. So we'll give what's happened since then. But first, the Pi cycle is here. I pay for this indicator. You can get it for free on lookintobitcoin.com. So you can pull that up right now and follow along at home. But last time, I believe we were somewhere around here where we had this move for the first time above this red line, right? This red line in the Pi cycle. So the Pi cycle is essentially the 111-day moving average and then the 2x multiple of the 350. A lot of people believe it's the 2x multiple of the 350 moving average, but it's actually the 350 of the price action. So the first time that we got above the red line here, it went parabolic. But we have to look left and see, well, what did it do last time? And the way that this price action moved was it formed what a lot of people thought was a symmetrical triangle, but it actually was a pennant. And we formed this pennant, and we actually did the same exact thing back here. We had moved above this red line for the first time, and we formed a pennant. And that's kind of where we left off last time. So after the pennant, we had a large correction previously, and this time we did the same. We had a large pennant with the pull here, and then we had this large correction. It wasn't as large. You can see that this was a 39% drop, and this was a 32% drop. So we can blame Bitcoin that it didn't mirror image, but again, it's never a mirror image. You want to look left in the charts just to gain more clarity, to look for more facts, to have things make a little bit more sense. And you always want to look for both sides of the coin and not emotionally attached to one way or the other. But now, as this cycle is progressing, Bitcoin has really rallied from this point all the way up to almost 60,000. We are getting very close in this Pi cycle top, right? And there's a few ways to look at it, right? You can look at the difference between the distance between the red and the orange line, which is roughly 5.5%. That's one way to look at it, to say, okay, we had this big gap here, right, where we were pretty far away, and now we're really close. We're in fact 5.5% away. And if we look at just the percentages, it puts us somewhere around here. That's where we are right now. This is how close we are present day. So the one thing to keep in mind is this Pi cycle, and I didn't explain it earlier because I assumed everybody had watched the first one, but if you haven't, you just basically look for the orange line to cross above the red. Once the orange line crosses above the red, it can be understood that it potentially is a market top. And we can use just the data points. When we crossed here, it was plus or minus 3 days of the market top. And as we scroll back in history, it crossed here, plus or minus 3 days of the market top. And it crossed here, plus or minus 3 days of the market top. Granted, we only have 3 data points. And this was created after this cycle top, meaning it was created to look at how to make sense of the past 3 market cycle tops. So we can't say with certainty that once this crosses, it's for sure certain.
Right.
What I will say is to use a confluence of things to understand where are we in our market cycle top. For example, in one of our previous videos, we showed you the Elliott wave theory, how we're potentially in wave 1, and how this 95 area is a very, very, very dangerous area. For example, if we had the pi cycle cross and we're above 95, it's time to be extra cautious. If we have a pi cycle top and we're not at 95 and we're, for example, at 50, maybe we should be slightly cautious, but we should look for more confluence. So that is just a big picture way to look at it. This is not set in stone. Oh my God, if this crosses, it's the end of the world. We should sell everything and run for the hills. It's just a sign to say, hey, the past 3 data points, this has happened. It was pretty treacherous afterwards, but let's take it with a grain of salt. We are getting very close. If we extrapolate this out, it says that, you know, we're a couple months away from a cross. So we're going to keep our close eye on it. Maybe we will be back on this channel in the future to give an update, maybe when we do have a cross. So we'll keep you updated on the pi cycle.
One thing I was looking at this on my channel actually at one point, and they are getting close, right? We know they're getting close. They're about 5% apart. If we look at the last cycle, there were times where they got close as well. But what kept them from crossing was a 39% drop, a 40% correction. So one way that I think, this would scare everyone, right? If we had a 40% drop, whether it happens at 50K and we go back to 30K, or whether we go up to 80K first and then we drop back down 40% or something. But we can see last time there was a time back in, it looks like September or so, around September, they got really close to crossing. But what kept them from crossing was, we've had these sizable corrections, and that sort of kicked the can down the road in terms of them actually crossing. So one thing to keep in mind, I would think, is they could cross in 2 months, right? At this rate, if we continue to see another leg up, then they will likely cross in the not so distant future. But if we, have some corrections along the way, there's a possibility that they come close to crossing, right? They get within a couple percent, but then they don't actually cross because we have that nice correction, and then therefore these averages then react accordingly. So I think that's something that we were looking at it on the channel and seeing, okay, well, a major correction could cause these to sort of diverge a little, and then they could converge back together if that 40% correction is ultimately we sort of bounce off of it and continue higher. And then the other thing you already mentioned, which I think is important and everyone should understand, and it's like every model, right? Every model to some degree is going to be wrong. They're all useful. Let's use as many as we can to understand the market as best as we can. And any model can be fit to say 3 data points, right? We do that on the channel as well, right? We fit to various models, and so we need to take it. We need to say they're not necessarily predictive, but if we hit those indicators, like those sort of things that have previously been representative of tops, then it would be reason to at least be cautious.
Of course. Yeah, I think that's spot on. And again, we could see a scenario like this where we have a cross, a major correction, and we fall back into another cycle where it's even more powerful than the first, and we have another cross. So again, just 3 data points.
Right.
It's just 3, but it's something to keep an eye on because we want to have confluence of multiple different charts that analyze different parts of price action, and all of them across the board saying the same thing. Then we're onto something. But this, as a standalone, proceed with caution. But again, if you look here, we were incredibly close, for quite a while before we saw a cross.
Right. Yeah, it looks like they were almost right on top of each other for a couple of weeks before they actually decisively crossed. And then once it crossed, as you said, it was like plus or minus 3 days or so. um, and then it was downhill. It was downhill for about a year or so after that. All right, yeah, this is a great. I think this is a great indicator, and I'm happy that you've presented it again. Give people an update. Okay, we still haven't crossed yet. Therefore, according to this indicator, there still is theoretically room to move up. At least in terms of a market cycle top, according to this indicator, there's room to move up. All right, so do you have another indicator as well that we can get an update on? Because I know we covered like three or four last time.
Yeah, there's one more that I think your audience enjoyed, and this is something I want to give a quick update on as well, is the Bitcoin investor tool. So I would like you to use this in Confluence as well. And again, you can find this also on lookintobitcoin.com. But this red line is incredibly important for multiple reasons. But it holds significant power as support and even stronger power as resistance over the history of Bitcoin. All right. And you can see that as we approach this on our channel, we were very cautious. And unfortunately, a lot of people were super bullish and we had a large correction. And then as we approached it for the second time, we had a specific strategy on our channel that I think will help people if you're really trying to struggle with how do I trade? Like, what do I do? Because let me just give you a quick breakdown of this, and this might help one person at home that's really struggling with trading. So we were around like 54, 55,000, and I just got bombarded with questions of should I buy right now? And my reaction was, okay, let me create a simple strategy that should connect with folks. And I said, look, we're approaching this red line. And let's say hypothetically we right now at 54,000, we're in no man's land. We don't know how we're going to react to this red line. If we get rejected, your risk and reward ratio is horrific. If we get above this red line, we always go parabolic. We always go straight to our market top. So if we confirm as support above this line, it's time to buy. If we get rejected, it's also time to buy, but at specific levels. Meaning the strategy was if we get above and confirm as support, it's time to buy because you can catch the wave of the cycle top. If we get rejected, I said buy a little bit at a 15%, which ended up being here, buy a little bit more at a 20%, and then buy a lot more at 25%. And if we get to a 30% correction, which brought us to our previous high support, buy as much as you can. Because those are few and far between. It'll often get bought up quickly. So that'll give you an idea of if you're looking to buy, you can use market structure and you can create some areas of buy a little bit more, buy a lot. And you can use that during the bull market. Again, this is not a bear market strategy, but just something simple, clean and clear that someone at home, it will connect with them to give them some light. Again, this is not financial advice. I'm not your financial advisor, but I just want to help somebody. So we know that this has been resistance for a while. Once it started as resistance, it will hold resistance for several times. Once we finally break through it, there's so much momentum in the charts when we finally break through that we often always go right to our market cycle high. So once we broke through here, we went right to our cycle high within weeks. Once we broke through here, we went to our market cycle high within weeks. Each time we've broken it, it's roughly 4 to 5 weeks. On Look Into Bitcoin, you can see the whole history. Here you can't, but each time it's 4 to 5 weeks until we reach our cycle high. We never break above this red line and then come with a major correction and then continue up. There's never uncertainty with this line. It's either incredibly strong resistance or very strong support.
Okay. So yeah, I think we discussed this one last time, but we had the move up to 42K and then we came back down, and it looks like since then our recent move took us straight to it, right? Our recent move that took us up to about 58K essentially went right up to that level before getting rejected back down. I'm sure people watching will want to know, where is it right now? If we were to go up tomorrow, where is it? If we go all the way, it looks like around 63,000 or so, 63,000. Okay, so
And
that's,
quickly.
yeah. I mean, obviously we know it's moving up each and every day. But for instance, like if it were to go up today to 63K, I mean that would be one crazy move, right? But if it went to 63K today, then that would represent that same area. And again, it's not saying that it can't break through it. It's saying that okay, this does hold resistance a lot in a bull market, and then once we break it, if we break it and then hold it as support, we're then we're in, it's crunch time, right? It's crunch time. It's you clear your schedule, right? I mean, it's we have a few weeks potentially, and things can get really crazy over the next few weeks, and then we might have a substantial pullback where we have to regroup for a while before we can trend higher. But one of the things, as you pointed out, is whenever we do go above it, if can you scroll back and look at the last cycle so we can take a look at that closer. So okay, so here it looks like we broke above it decisively in close to November. Yeah, in November, and then over the next 3, 4, 5 weeks or so, that's when we ended up putting in our market top. It looks like we crossed above it. What is that? Around 7,000? Yeah, around 7,000. So from there, it did a 3x. Right, from there it did about a 3x, not quite a 3x from when it crossed. Can you just scroll back to the last one? I'm just sort of doing some dubious extrapolation that probably doesn't mean anything. So this one crossed at around 200, and then what did it peak at? Around 1100. So that was about a 5x, right? So we had a 5x. The next one was about a 3x. What was this one here? This was about $50 up to 300. So that was a 6x, right? So we had about, and maybe actually a little bit more than a 6x because it was $45. So maybe we'd say like 6.5 or 7x or so. So we had like a 7x, a 5x, a 3x. I'm just sort of like extrapolating in my mind, to see how far do we extend from that area. So if we were to treat the last one as an upper bound, right? If we did, I'm not saying we should or anything, but if we did, then a 3x from crossing would probably be like I would consider it almost to be like our limit that we probably wouldn't be able to cross, because I just think that it's going to be harder to move the market because there's a lot more volume will take it. So a 3x from crossing it at say 63K, or let's say if it crosses it in a few weeks at 70K, that's pretty substantial. But if we somewhat dubiously extrapolate, then maybe it won't be quite the same as last time, which wasn't quite the same as the time before, which wasn't quite the same time before. Maybe it'll be closer to like a 2x or somewhere in between. Again, just some back of the envelope math. Nothing to take to the bank, right? Not financial advice, of course, but just recognizing that so far, every time we've crossed beyond that level, the multiple from that point has been less each time when when that cycle peak actually hit.
Right. Representing our true blow off top,
right.
Like textbook blow off top. So I think that this is critical for that fact. If we cross this line, it's time to buckle up, right? Our blow off top essentially is just the market moving so quickly, it's not sustainable. It's not healthy, but that's at almost the tipping point, right? So this would be important. This is kind of like a step one, right? If we get above this, it's time to proceed with a little more cautious, right? If we get above this and our RSI on the 2-week is above 95, it's time to be very cautious. And if we do this and we're above the 95 and we come over to the pi cycle and this is crossed and we have confluence across the board, it's time to proceed with extraordinary cautious. But unfortunately, if all of those things were to happen, you would have the most bullish sentiment the market has ever seen in the history of Bitcoin. So it'll be very tough to control your emotions, which is why you should go to Ben's channel or potentially my channel just to stay level-headed and not, be bombarded with all of these, the hopium of Bitcoin, $1 million by tomorrow.
Yeah, I mean, I agree. It's like a lot of potential confluence between a lot of different indicators, right? You look at that macro trend line that you showed us in the last video. We know it's already over 80K. You carry it out another couple months, it'll be at 100K, right? It'll be at 100K. If things keep going up as quickly as they are, we'll probably see the pi cycle top indicator cross in a few months at this rate if things keep going like this. And especially if we have a blow off move to 100K, it's going to be hard for them not to cross, because that's where they generally would cross. And the other thing, right, so that's the pi cycle top is probably, if we were to see a blow off move, right, that would probably cross, somewhere in that ballpark. If we go above this and we did our dubious extrapolation, like say 6 or 7x, then 5x and 3x, when we cross another 2x, could put us at around 100K. So it seems like, again, we're not saying this is going to happen, because we'll have to see what happens, right? And we'll have to see what happens in the short term. But it's to say that there exists a scenario. There's a theoretical scenario that exists where we could imagine these three various indicators that you've shown sort of all having this confluence of saying, hey guys, like, we just had a run from $3,800 to six figures or something, and all three are could be flashing. This has historically been a major blow off move before a substantial correction. So I think as we've said before, right, having as many models as possible is so useful in navigating the space, because you can't just rely on one. But by looking at all of them, it really does tell a great picture. So if you guys want updates to these things more frequently than we have Steve on the channel, because if you want daily updates or weekly updates on all these types of things, remember, go subscribe to Steve. Head on over to his channel, hit that subscribe button. You can turn on your notifications to be notified of future videos. And while you're at it, also subscribe to my channel too, as we continue to navigate this cycle, present models, try to figure out where we are in the cycle. And of course, we'll be here every step of the way. Steve, it was a pleasure to have you on the show again. I know everyone's going to enjoy having these updates, and we will look forward to having you back on in a little bit longer.
Can I say one last thing, Ben?
Sure, go ahead.
I get so many questions, and I'm sure there's going to be some people wondering right now, hypothetically, if we did across the board hit on all of these, and we say, hey, we're getting confluence that it's the top for Bitcoin, everyone's question is, well, what about altcoins? Can altcoins still explode since then? I think that's the one big question. And let me just quickly touch on it, and then I'm sorry to interrupt. And I just want to, because I know everyone's going to have this question. And I would say proceed with caution across the board. If you get confluence across the board that Bitcoin potentially is at a market cycle top, don't try to time the market and make a couple more bucks with altcoins. And that's just a terrible way to go about it. You will ultimately get burned if you're really trying to time the market cycle top and cycle bottom. So last time, obviously, altcoins rallied a little longer after Bitcoin, but again, it's time to proceed with caution. That's the blanket answer. And that was the last piece I wanted to share.
Yeah, and I mean, honestly, it's good advice as well, because a lot of people they've made a lot of money on Bitcoin, and then they go gamble it all on altcoins, and it's not to say that you can't theoretically make money, but one of the hard things to do is, even if altcoins do go up, it's hard to know when to stop if you decide to embark on that venture, right? And it can be dangerous, because you might think that, oh, well, if I made a good trade and then this other one went good, I'm invincible, right? And I feel like I've seen people make a lot of money in the bull market and then squander it in the last week or two, of the cycle, or around the peak, like those last 2 weeks, they just completely squander it. And then all that work they put in the bear market, the accumulation phase, accumulating, it's just all gone if they're not responsible, right? So this is a great point. I'm glad you said this. Be responsible, right? We can't say that enough. You have to consider the implications of, what if you're wrong, right? What if you're wrong? You've had a great run, protect it, and then you can always continue on from there. But yeah, Steve, thanks for coming on. Thanks for that last piece of information. I'm sure a lot of people are going to benefit from hearing that as well. So one final reminder, subscribe to this channel, subscribe to Steve's channel. Steve, it was a pleasure having you on. We'll probably have you on again either next month or the month after, depending on what the market does between now and then. with as quickly as the market's moving, we'll want updates, right? We're going to want updates if we do go into this mania mode. I mean, we're already somewhat in a mania mode now, but if we go into this mania euphoric beyond belief mode where people start saying, okay, Bitcoin's never going to have a correction again, we'll probably bring you back on and we'll walk through these indicators and see kind of where we stand.
Perfect. Thanks for having me, Ben. It was a pleasure. Everyone have a beautiful day.